Hi guys, today I want to talk about the different ways Indian companies can reward you. And based on the video of South Indian Bank and Rights, I thought it's nice to take a moment to explain different ways investors can be rewarded and something for you to keep your eye out when you see these opportunities as an investor comes to you, what it means and how you can make a play for it. And if you do make a play for it, how it can benefit you. So I just wanted to talk about 8 different ways companies can reward you. Since I'm in the topic of talking how companies can reward shareholders, I thought I'll talk a little bit more so it gives clarity on the different ways companies reward shareholders. The first and foremost way a company can reward its shareholder is by issuing dividends. Dividends can be issued by the company as the company wishes based on the company's profitability and its dividend policy. So it can be quarter based, half yearly, or it can be yearly. It all depends purely on the company, how they decide to set up the dividend policy. So that is how the first way a company can reward a shareholder. The second way a company rewards is the most logical way, which is capital appreciation. You have invested a certain amount of capital in the company, and the company share prices go up. So it's appreciating in capital, and that's where the term capital gains come from. It's two words, capital and gains. There are gains in your capital. So if you wish to sell the shares, you'll have gained in capital. The third way is the share buyback, where the company buys back shares and extinguishes them. That way, shareholders who want to exit can exit at a premium price, and the existing shareholders, the shareholders who are left behind who continue staying, their share prices also have appreciated in capital. They also have rewards in this. The fourth way is known as the bonus share. This is done very frequently in India, where the shareholders are increased, equity is increased by issuing bonuses. This is preferred by the company owners usually because it increases their pool of shares also and gives the owners of the company greater flexibility on raising funds for their company or whatever they wish to do. So bonus is very common and is very frequently used in India. The other one, which is known as warrants. Warrant is nothing but telling the investor or buyer of the person who buys a warrant that they have the right to buy the share when the warrant expires at a specific price predetermined at the time of issuing the warrant. So it's like agreeing that you can buy a kilo of rice 3 years from now for 50 rupees. So that warrant has that value because 3 years from now, inflation would have pushed the price of rupee of 1 kilo of rice to above 50 rupees. So then you'll say, okay, it is great to hold this because I can exercise this at the point of time and you can hold on to this. That's what basically a warrant does. And warrants, the rights of a warrant can also be transferred, meaning you can sell your warrant. So you have, let's say, bought some warrants and you can transfer it. And this is not used very frequently in India. It's not seen often, and warrants have an expiry date, and this is how the famously IDFC Vaidyanathan exercised his warrants, and people thought he was exiting the company, and lots of rumors spread. It wasn't that. He had warrants in his hand, a right to buy a certain amount of shares, and so he sold his holdings and he rebought those shares at a lower price. That means, let's say you have the right to buy 100 shares at 50 rupees, and right now the market is trading at 100 rupees or more. So you can sell your 100 shares at that high amount and exercise your warrant and buy these at a lower price and you scoop out some extra cash. So it makes sense. So that's how warrants are used, and they're not very common in India. So that's why there was a lot of confusion when it happened, because it is an innovative way of raising funds, but companies don't like doing it because you are stuck with that warrant that you have to agree. You're bound to selling that share at a lower price or whatever price you've agreed to. The other way is, of course, the South Indian Bank, which is a rights issue, which I spoke about extensively in yesterday's video, how the rights issue works. And it's one of the most common ways they do it. And like in South Indian Bank's case, they did it in 2017. They're doing it again now. So it's a very nice way to raise capital when the companies require. Another way which in Indian companies tend to raise liquidity for shareholders is by stock splits. So you split the stock, and this is when the face value of the company changes. And just by doing that, the amount of stocks in the market increases, the float increases. So as an investor, when you're having 100 shares, suddenly you'll have, let's say face value from 10 comes down to 1. So by a factor of 10, your shares increase. So this is also commonly used. Like Arun was asking in the video, why doesn't MRF do that and allow investors to come in? There has to be a reason for them to do it. Because when more shares are there in the market, the more people, you can lose control of your company, logically thinking. Anyway, so the last method which companies in India can reward their investors is known as preferred stocks. These are also not very common in India because the preferred stock can have preferred options in it. It's like having business class or a first class ticket. You're all on the same flight, but you know how business class and first class is treated. You get preferential treatment, so you can have different voting rights. You can have more dividend issued compared to a common stock. So those are basic things which a preferential stock has, and those are usually priced higher, and those can also be traded in the market. And sometimes company can issue preferential shares to investors, which is also not very common in India because companies usually in India don't like paying dividends, and definitely family-run businesses in India don't like giving up ownership rights to anybody, so they won't want to give voting rights out. So anyway, I hope that kind of explains the different ways companies in India can reward you as an investor, and it gives them clarity and on how rights and warrants and everything works. Please do put your comments down below. My team does read it and they do tell me they want you to talk about this, they want you to talk about that, and I do try and explain it. And I hope you guys tune in tomorrow where I talk about NVIDIA and the story behind NVIDIA and the rise of NVIDIA. Do catch the video tomorrow, guys. Thanks. So thanks for watching the video.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.